This comparison illustrates the trap millions of Australians fall into every July. People rush to submit their tax returns the moment the portal opens, but prioritizing a fast refund by guessing numbers or lodging early is exactly how taxpayers trigger unexpected debts and forced amendments months down the line. This guide is built specifically to walk you through preparing your 2025 to 2026 Australian individual income tax return. The rules we are looking at are accurate as of July 19, 2026, and apply to everyone from temporary visa holders and international students to permanent residents and migrants. Building a structurally sound tax return actually requires patience. You need to deliberately delay your lodgement until every piece of your financial data is fully verified. To avoid that trap, you need to clear the 7-point verification checklist shown here before you even think about clicking the Lodge button. Skipping these steps trades a few days of convenience right now for years of potential audit risk from the ATO. Check 1 is confirming your tax residency. Australian resident for tax purposes is a highly specific statutory definition, and it is entirely separate from your actual immigration status. Holding a student or temporary work visa does not automatically dictate how the tax system treats you. Looking at this matrix, you can see the practical disconnect between immigration and tax. If you qualify as an Australian resident for tax purposes, you generally receive the $18,200 tax-free threshold. Foreign residents for tax purposes generally do not. As this chart shows, full-year resident individual tax rates start at nil up to that $18,200 mark. From there, it scales up, 16 cents for every dollar over $18,200, climbing through the higher brackets up to 45 cents on the dollar for income over $190,000. If you are a working holidaymaker or hold temporary resident tax status, you are subject to entirely unique tax rules. Do not apply the standard resident brackets to your situation. Guessing your tax residency based on what your passport stamp says is the fastest way to trigger a massive, unexpected debt when the ATO eventually corrects your assessment. Check 2. Wait for your data. Modern Australian employers report your payroll information directly to the ATO through single-touch payroll. The old paper group certificates are obsolete. When you check your income statement in MyGov, look for the critical status indicator shown here. It will either tell you the data is not tax-ready or tax-ready. Never assume that pre-filled ATO data is inherently complete, and absolutely do not lodge your return while your statement is still unfinalized. Employers have until July 14th to finalize this data. If you lodge early and your payroll department later updates your salary or withheld tax figures, you will be forced to amend your return. Check 3 involves reporting every dollar you earned. That includes gig economy platform work, freelance contractor payments, and cash-in-hand employment. If you operate as a sole trader, holding an Australian business number does not make that income tax-free. It all goes into your individual return. And if you are an Australian tax resident, you generally have to declare your worldwide income. We are talking about foreign bank interest, overseas dividends, and capital gains from crypto assets. The ATO is already tracking this. They actively receive massive data feeds from domestic banks, digital platforms, cryptocurrency providers, and international treaty partners. Omitting non-salary income simply because it didn't appear on a standard payslip turns your tax return into an active target for ATO data matching algorithms. Check 4 covers your deductions.
Let's dismantle a persistent myth right now. You cannot automatically claim a $300 work deduction without having actually spent the money. The foundational rules are strict. You must have spent the money out of your pocket, you cannot have been reimbursed, and the expense must directly relate to earning your income. This calculation breakdown highlights the 2025 to 2026 ATO fixed rate method for working from home. It allows exactly 70 cents per hour to cover your running expenses. But utilizing this exact 70-cent fixed rate strictly requires you to keep a continuous, comprehensive log of all the actual hours you worked from home throughout the entire year. Also, keep in mind that standard commuting between your home and a regular workplace, along with ordinary daily clothing, are almost never legally deductible. Treating your deductions as a guessing game rather than backing them up with strict mathematical records leaves you entirely defenseless during an ATO review.
Check 5. Untangling Medicare. The 2% Medicare levy is a distinct financial liability completely separate from your ordinary income tax. If you hold overseas student health cover or overseas visitors health cover, do not assume that automatically grants you an exemption from paying the Medicare levy. This decision tree maps the actual administrative reality. To claim a Medicare levy exemption, holding foreign cover isn't enough. You generally need to follow this path and obtain a formal Medicare entitlement statement directly from Services Australia. Confusing private visa health cover with a statutory Medicare exemption guarantees an unexpected debt when that 2% levy is retroactively applied to your taxable income. Check 6 is cybersecurity. Tax time triggers a surge in ATO and MyGov impersonation scams. Watch out for unexpected text messages demanding immediate payment, threatening you with arrest, or offering a surprise tax refund if you click an external link. Bypass those links entirely. Log directly into MyGov yourself, and before you finalize your return, carefully verify that the BSB and account numbers listed for your refund are actually yours. Rushing through these final security checks can result in you delivering a legitimate tax refund directly into a scammer's bank account. Check 7 is the final review. Before you click Lodge, run through all your residency answers, income inputs, and health data one last time. Remember that the My Tax Refund estimate is merely a preliminary calculation. Receiving a refund into your account does not prove that your return was legally accurate. If you are preparing your own return, your standard lodgement deadline is October 31st, 2026. If you discover an error after you've lodged, you must file a proactive amendment immediately. Do not ignore the mistake just because your refund has already cleared. The administrative friction of waiting for tax-ready statuses and securing Medicare entitlement statements can be frustrating, but that friction is the necessary cost of filing an audit-proof return. This 7-step self-audit is designed for standard employees, working holidaymakers, and straightforward sole traders aiming for that October deadline. This scorecard maps exactly when you should look for help. If you fall into the right column, dealing with a complex sole trader setup, significant cryptocurrency trading, foreign company interests, or an ongoing tax residency dispute, you should not be self-lodging. If your circumstances fall into those complex categories, step away from the MyTax portal and engage a registered tax agent. A meticulously accurate return protects your finances indefinitely. A rushed return only protects you until the ATO decides to look closer.